Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to provide an update on the early halving year price action pattern that we previously outlined. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Going into the spot ETF, we said that we would likely get a pullback about mid-January. And then after the spot ETF occurred and we were back over here, at around 42K, one of the things we noted in this video over here where we talked about the early halving year pattern is that what tends to happen is you get a dip early on in the halving year. So take a look at 2024 and then compare it to 2020 and 2016 and 2012, right? So in all prior cases for Bitcoin, sometime in Q1, there was a correction that took Bitcoin anywhere from between 15 to 30% below the yearly open, right? So the yearly open for Bitcoin this year is 42,279. So from 42,279, a 15% drop puts you at around 36K. Okay? Now remember, there's no guarantee it's going to play out like prior cycles. I'm just simply pointing out historical drawdowns at this phase of the cycle, right? And again, in 2016, looks like the max drawdown was about 16%. In 2012, it looks like max drawdown was about 16, 17% as well. So far from the yearly open, at this point, Bitcoin has dropped about 8.5%, 8 to 9%, right? So it has been a somewhat of a substantial drop. And, it's easy to look at a drop like this and come to all sorts of conclusions. But I think it's also important to try to stay as true to the chart as we can and say, well, look, at this point, this correction has not evolved into anything more than what we've already seen. It doesn't mean that it can't, but if you were to look at the pullback in February of 2023 going into March, it's about a 22% drop. And then this drop here, right, was about a 21% drop. This drop here was also about a 21% drop. And coincidentally enough, this drop so far has been about a 21% drop. So while it certainly has felt like a large pullback, right? I mean, 49K all the way down to 39K, it's still within the realm of what we have seen over the last year. So if it were to fall to the 20-week SMA or the bull market support band, it would actually have to fall further than it has fallen during these other three prior corrections. The one way that both could be true, where we go to the bull market support band, but Bitcoin doesn't fall too much further, would be if it just takes a while and, the 20-week SMA just sort of slowly curls up here, right? And then, Bitcoin price action just sort of fades into that. Something like that could happen. In fact, what has been happening for Bitcoin price action in a lot of these prior corrections is that it kind of slowly faded back to it. And like, here's an example where it was still above it and we got a pop back up and then it still faded back down a few weeks later and we had a long wick down. Same thing over here, right? It got close, didn't make it to the bull market support band, and then it popped back up only then a few weeks later, only to then drop back down again, right? So those sorts of patterns could, of course, repeat themselves. You could go to the 20-week SMA, but it doesn't mean that you have to immediately drop to it. If it were to play out like these prior patterns and looking at, say, like the short-term risk that we were talking about in the last video, it's a slow process down, right? Where the extension from the 20-week SMA just sort of slowly goes back down to where we get back to that bull market support band, right? So, we are getting relatively close. Again, just to reiterate, while I talk about this short-term stuff, I do not think it makes sense to try to time the market in this way. For me, as I've said before, I buy when the risk is low, the risk metric's low, and then I take profits when the risk levels are high. But I don't try to time each individual move based on this sort of outlook. One other thing that we could look at is that 50-day moving average. We covered that a little bit as well. So the 50-day SMA for Bitcoin, we have fallen below it about 10%. You can see that prior drops below the 50-day SMA were closer to it. That one was about 14%. This one was about 14%. And then this one right here was about 14%. So if Bitcoin were to drop 14% below the 50-day SMA from where it, sort of crossed down, a 14% drop actually puts it at around 37K. We've mentioned a lot that sort of the high 30K range is going to be where, if the bulls are going to hold the line, that's where they're going to want to do it, in this high 30K range. And so here we are, right? We're in the high 30K range. We'll see if that happens. The other thing, of course, to remain aware of is the 100-week SMA, right? This is the 100-week moving average. So this is sort of like a different scenario where if the bull market support band doesn't hold, like 2019, right? If it doesn't hold, then the 100-week SMA is, I think, what you would look towards next. So the 100-week SMA is currently around 28K, which coincidentally is sort of slowly starting to go back up to where the prior breakout zone was, right? Slowly starting to go back up. So if it plays out like this and we get a drop below the bull market support band sometime in the next couple of months, then I think you would be looking towards that 100-week moving average as sort of the next level that could theoretically hold as support. There's other ways that we can look at the market as well. There's the fear and greed index. This has been putting in. You can see that it has been putting in higher lows and higher highs for a while. So the current fear and greed index reading is at 48. So this one might be a one to keep an eye on. The prior low was all the way down at 30, right? All the way down at 30. So a pretty big drop that we got back in September. So we'll see if this one can do that same thing again. If it puts in a lower low, then that could be a sort of a sign that the trend is changing. But otherwise, I would look to see if it continues the pattern. So this is sort of just, I just wanted to provide an update on this early year halving pattern where Bitcoin does get this pullback, and it's actually happened several times, in fact. And in fact, in both of the last two cycles, when it had this pullback, again, this is just a fact, right? This is what Ben thinks. This is just a fact. In both of the last two cycles, when Bitcoin had a pullback in Q1, we tested both the bull market support band and the 100-week moving average, right? So it happened right here. And then in the last cycle, it happened right here. But in both cases, one we held support, one we didn't. In both cases, both of those were eventually tagged. So we're getting kind of close, right? And I don't want to give you the impression that there's a guarantee that we even drop to the 20-week SMA. The market can surprise, and it's always possible that it gets a pop back up and then leaves everyone second guessing themselves for another 2 months. So that's why I say I would come up with a strategy, stick to it, whether it's based on risk levels or something else, stick to it, and go forward like that. As far as altcoins go, because I see people ask me about altcoins in the comments a lot. As far as altcoins go, they're always, as always, are going to be dependent on Bitcoin. If Bitcoin bounces, then it will likely raise the altcoin market up. If Bitcoin drops, then the altcoin market will get wrecked even harder. So, for instance, to get back to the bull market support band for Bitcoin, to get back to say the 21-week EMA, it's only about a 5% drop. Whereas for the altcoin market, to get back to that level, the 21-week EMA, it's about a 7 to 8% drop. right? So you can see how the altcoin market is more volatile as these moves play out, and that's one of the reasons why we see the Bitcoin dominance just kind of slowly keep grinding up, because as Bitcoin falls back into the bull market support band, that's exactly what happens, is alts fall a bit harder. If you think back to earlier in 2023, there was a period over here where Bitcoin was falling back into the bull market support band. And if you were to overlay Bitcoin dominance onto the chart, you can see that dominance was starting to go up before we got that bounce, right? Before that bounce occurred. And so whether we get a bounce or not, it seems likely that dominance would continue to go up as this move continues, right? And even in this move over here, there were some weeks where Bitcoin popped back up. I mean, like it got pretty close to the 20-week SMA, and then it got a 5% weekly candle, right? A 5% weekly candle from the current price would put Bitcoin back at, 42K or so. So just trying to give people, the perspective here on the market, and to say, look, I mean, I know that it certainly seems like this has been a large pullback, but at this point, it's actually been a pretty standard pullback. And when you look at the year-to-date ROI of this year compared to 2016, it's actually pretty closely still following it, right? Now, again, if a black swan event were to occur, if the economy were to slow down, then yes, we could deviate from this stuff. That's exactly what happened in 2020, right? I mean, we deviated from it and we had a much larger drop. But I'm just trying to show you that every single cycle early on in the halving year, we've had a drop in Q1 that took us, between 15 to 30% below the yearly open. This cycle, that would correspond, to hitting the high 30K range, which is where we've been. Even going a bit lower would still be within the realm of historical norms. This reaction is going to be a very important reaction, okay? Because if it bounces, which is what you can see there's examples over here where it gets to the 20-week SMA and then bounces. If it bounces, then the dominance of Bitcoin should absolutely soar. And if that is the case, then I imagine Ether Bitcoin would likely take a hit. So again, it's probably going to stay relatively boring for a little bit longer, in terms of thinking about a mid-January correction. The whole idea was that it would take at least a few weeks, if not a couple of months. And so far, we're sort of in our third week of the correction. Some of these corrections over here took a lot longer, right? So it could still drag on for another, 3 to 4 weeks easily and not be out of the realm of what we've historically seen. So, I think that these markets are exhausting for everyone, draining for everyone. There's certainly a lot of different views on how things are going to play out. But again, all I can stress is that it's important to have a plan and stick to it no matter what. And if we do get a larger drop than these three, right? If we get a larger drop where either it goes to this level here or the 100-week or even lower, you need to have a plan in place so you know how to navigate that, right? You don't want to be the person that goes into it not having a plan and then you end up capitulating something only to then regret it a few months later. So make sure you have a plan, stick to it. We've outlined likely outcomes. Hopefully it's useful to you guys. Thank you for tuning in. Make sure you subscribe, give the video a thumbs up, and I'll see you guys next time. Bye.